At the end of the day, a low inflation rate is useless if the prices of necessities are rising faster than people's incomes. And that's the major lesson many investors close to retirement should have learned a long time ago. Nearly half of well off investors in the US claim that inflation is severely hindering their retirement aspirations, as revealed by the 2023 Natixis Global Survey of Individual Investors. Hello, I'm Ivory Hecker for Noble Gold News. Despite a reduction in inflation rates from the peak experienced in mid-2022, 84% of participants acknowledge that the recent inflationary spike has been a stark reminder of the significant threat posed to their future earnings and savings. The majority of those surveyed, possessing a minimum of $100,000 in investable assets, expressed concerns over their ability to work sufficiently long to counteract the financial impact and safeguard their retirement goals. Prices of necessities are up more than 50% in the last 3 years and up 25% over the past 4 years, outpacing overall inflation of 19% during the same period. And while prices of appliances, smartphones, and a smattering of other goods have declined, groceries got slightly more expensive last year, with particularly sharp jumps for beef, sugar, and juice, among other items. That means even though grocery costs are now rising at a slower pace than in the depth of the pandemic's inflationary spike, the same shopping basket still costs more than a month or a year ago, a fact that has soured many consumers on the economy. It's not surprising that inflation emerged as the top investment concern, with 77% of American respondents also expressing anxiety over the potential for higher government debt levels to result in reductions in Social Security benefits. Nearly half regard such benefit cuts as their primary retirement concern, while slightly over half believe that these cuts would pose substantial financial management challenges. Challenges in saving. For many, saving more as a strategy against inflation is not feasible, with approximately 2/3 of respondents stating that elevated prices have significantly obstructed their retirement savings efforts, Natixis reports. A substantial number of workers anticipate needing to extend their working years beyond initial expectations. Furthermore, over 40% of Americans anticipate needing to live frugally during retirement, and about 30% foresee needing to seek financial support from friends and family. Roughly a third believe relocating to a more affordable area is essential for managing retirement costs. The typical U.S. household needed to pay $211 more a month in December to purchase the same goods and services it did 1 year ago, because of still high inflation, according to new calculations from Moody's Analytics. Americans are paying on average $1,020 more each month compared with the same time 2 years ago. These insights were part of the findings published on Wednesday from a survey conducted in March and April involving 750 working Americans as part of the release of Natixis' 2023 Global Retirement Index. The high grocery prices reflect a number of economic factors. The run-up in food costs began early in the pandemic, when supply chain snarls and worker shortages collided with rampant demand for groceries. But more recent developments continue to keep prices high. Droughts and extreme heat have dampened production of fruits and vegetables. Dry spells in India and Thailand have curtailed sugar exports, and an ongoing avian flu outbreak, the largest in U.S. history, sent chicken and egg prices soaring, though egg prices fell after an initial spike. Increased wages in processing plants, warehouses, and grocery stores have raised costs. Additionally, the conflict between Russia and Ukraine in early 2022 caused a surge in commodity prices like wheat, corn, and vegetable oils, though they are now stabilizing. Even fast food is becoming expensive. Dining out has become pricier for Americans, with fast food prices jumping nearly 6% in January compared to the previous year, according to recent inflation data. McDonald's and other chains have raised prices recently, potentially deterring price-sensitive customers. CEO Chris Kempczynski noted a decline in visits and spending among customers earning $45,000 per year or less. The impact of rising prices on groceries and dining varies across income levels. Low-income consumers are hit hardest as they must allocate a larger portion of their income to cover essentials. For instance, those in the bottom 20% of earners with an annual income of around $14,000 spend 25% of their money on groceries, while those in the top 20% earning about $244,000 annually only allocate 3.5% to groceries, according to Groundwork Collective. You need to hedge now. Things are worse than what the numbers say. That's the truth. You need to review your portfolio and reallocate to assets that could give you better yields. More importantly, you need a hedge. There are many different hedges, but the best one is gold. It has historically gone up each time we have an economic downturn. It has also outperformed the market and bonds. Noble Gold Investments is here to give you relevant and objective information that could help you make a decision when it comes to investing for your future. More importantly, they can cover all of your precious metal investment needs. They have associates waiting on the line to answer any questions that you have.